Apple Q3 earnings report. iPhone sales beat estimates. Stock pops. Full analysis. Apple just delivered a major win in its Q3 earnings report, outperforming expectations and sending its stock soaring. But here's where it gets controversial. While the company celebrated a record-breaking quarter, questions linger about how it will navigate the challenges ahead. Let's break down what happened and why this matters. Apple's Q3 results were nothing short of impressive. Revenue hit $94 billion, surpassing Wall Street's estimate of $89.3 billion, while earnings per share, EPS, jumped to $1.57, far above the expected $1.43. The iPhone, Apple's crown jewel, contributed $44.58 billion in revenue, outpacing analysts' projections of $40.06 billion. Even Greater China, a region often seen as a battleground for tech giants, saw revenue rise to $15.37 billion, edging past the $15.19 billion forecast. These numbers didn't just boost the stock, it surged 2% after hours, a sign of investor confidence. CEO Tim Cook was on the defensive during the earnings call, addressing concerns about tariffs, smart glasses, and Apple's AI strategy. He emphasized that the company's focus remains on its core strengths, even as it faces pressure from competitors like Meta, which has already launched affordable AI-powered glasses. Cook also hinted that Apple's shift toward manufacturing in India could help mitigate tariff costs. Though he admitted the challenge of balancing global supply chains remains complex. But not all the news is positive. Analysts warn that Apple's lack of a clear AI roadmap puts it at a disadvantage compared to tech titans like Microsoft and Google. While Apple's services revenue hit a record $27.42 billion, some argue that the company is still trying to catch up in a rapidly evolving landscape. One particularly hot topic was the potential loss of Google's search deal, a $20 billion annual revenue stream that could jeopardize Apple's services business if the agreement is challenged in court. Here's where the controversy really starts. Apple's AI strategy. Despite recent investments, the company has been criticized for moving too slowly. Analysts like Morgan Stanley's Eric Woodring argue that Apple's approach is less urgent than that of its rivals, but others believe the company has time to catch up. Meanwhile, rumors swirl about a possible acquisition of Perplexity AI, a startup with cutting-edge AI technology. If Apple acts, it could dramatically accelerate its progress in this critical area. Looking ahead, Apple's guidance for the September quarter suggests steady growth, though it warns of rising tariff costs. The company's $500 billion U.S. investment initiative, including partnerships with local manufacturers and educational programs, shows its commitment to reshaping its supply chain. Yet with global markets shifting and competition intensifying, the real test will be whether Apple can maintain its momentum without falling behind. So what does this all mean for Apple's future? Will its focus on hardware and services be enough to sustain its growth? Or will it need to pivot more aggressively toward AI and software innovation? As the tech world races toward the next era of digital transformation, Apple's ability to adapt and stay ahead will determine its long-term success. What's your take? Can Apple keep up with the pace of change, or is it running out of time? Apple's revenue growth, Q3 results, future insights. Shattering expectations, Apple delivers its highest revenue growth in over 3 years. If you thought Apple's days of jaw-dropping financial surprises were behind it, think again. The world's most valuable tech company just stunned Wall Street with a quarterly earnings report that not only surpassed forecasts, but also marked its most substantial revenue growth since December 2021. And here's where it gets controversial. Some skeptics wonder if this streak can last, or if Apple is simply squeezing its existing base for all it's worth. On Thursday, Apple revealed its results for the fiscal third quarter, and let's just say, even the most optimistic analysts had to sit up and pay attention. iPhone sales surged an impressive 13% compared to last year, driving Apple's total revenue up by a notable 10%. This jump catapulted Apple to its best quarterly revenue increase in over 3 years. Immediately after the release, Apple shares soared in after-hours trading, bolstered further by fresh details regarding Apple's initial September quarter performance. Here's a quick rundown of Apple's results against what Wall Street had been predicting for the quarter ending June 28. Earnings per share landed at $1.57, well above the anticipated $1.43. Total revenue reached a staggering $94.04 billion, beating the $89.53 billion projection. iPhone revenue came in exceptionally strong at $44.58 billion versus $40.22 billion expected. Mac sales outperformed expectations with $8.05 billion, surpassing the anticipated $7.26 billion. iPad revenue, however, dipped slightly to $6.58 billion, below the expected $7.24 billion. Other products, including wearables and accessories, earned $7.40 billion. Just shy of the $7.82 billion Wall Street expected. Services revenue, covering everything from App Store subscriptions to warranty programs and search licensing, rose to $27.42 billion, compared with a $26.80 billion estimate. The company's gross margin was an impressive 46.5%, slightly higher than anticipated, 45.9%. So what's fueling this momentum? On a call with financial analysts, Apple offered some guidance for the upcoming September quarter. The company projects revenue to rise by mid to high single-digit percentages, with services expected to maintain their healthy 13% growth trajectory. Gross margin is predicted to stay strong, between 46 and 47%, even as Apple continues to pay substantial tariffs on its products. And this is the part most people miss. Apple faces enormous tariff costs. In the June quarter alone, Apple shelled out $800 million because of tariffs, according to CEO Tim Cook. Yet this figure actually beat previous estimates by $100 million. Looking ahead, Apple may face as much as $1.1 billion in tariff expenses this September, assuming current conditions remain unchanged. Apple's bottom line speaks volumes. 1.57 earnings per share translates to $24.43 billion in net income this past quarter, a significant step up from $21.45 billion or 1.40 per share in the same quarter last year. Cook described the performance as exceptional by any measure. Notably, he attributed about 1 percentage point of overall revenue growth to customers who snapped up devices early to avoid price hikes from potential tariffs. And let's talk about those iPhones, the core of Apple's empire. iPhone business remains the heartbeat of the company, with sales reaching $44.58 billion this quarter, up 13% year-over-year. Cook credits much of this to the stronger popularity of the iPhone 16, which is outpacing last year's iPhone 15 by strong double-digit percentages. Upgraders are leading the charge, with more existing users than ever choosing to move up to the latest model. Meanwhile, Apple's Mac segment recorded the fastest growth among its major divisions, leaping almost 15% to $8.05 billion. This surge came off the back of new MacBook Air laptops, Apple's perennial bestseller, hitting the shelves just ahead of the quarter. Services, another pillar of Apple's business, are also on a roll, collectively generating $27.42 billion, a 13% improvement over last year. Cook pointed to the steady climb in iCloud subscriptions and robust double-digit growth for the App Store as key contributors. But it hasn't all been smooth sailing. Here comes a point likely to spark debate. Both iPad and wearables, segments that once fueled Apple's rapid diversification, have stumbled. iPad sales slipped by 8% to $6.58 billion, despite the release of a budget-friendly option in March. Wearables, including Apple Watch and AirPods, also dropped by 8.64% to $7.4 billion. Is this a sign that Apple's next big thing isn't connecting the way iPhone once did? Or is this just a minor blip in an otherwise stellar run? One noteworthy turnaround: Apple's fortunes in China rebounded. sales from China, including Hong Kong and Taiwan, rose 4% year-over-year to reach $15.37 billion, reversing a slump seen over the past 2 quarters. Cook credited regional subsidies for some of Apple's products as a key driver. "The subsidy does apply to some of our products, and it clearly helps," he said. But here's the controversial twist. With rising competition and geopolitical tensions, can Apple maintain this positive trend in the world's largest smartphone market? AI, Apple's biggest bet yet? Let's not gloss over what could become the most contentious topic of all: artificial intelligence. At June's Worldwide Developers Conference, WWDC, Apple showcased new software improvements, weaving AI more deeply into its products. Yet, investor reaction was somewhat muted. Cook, however, is unwavering. "AI is one of the most profound technologies of our lifetime," he stated, emphasizing that Apple is ramping up its investments and integrating AI across all devices, platforms, and internal operations. Cook also revealed that Apple had acquired about 7 companies this year, though none were particularly large deals. He left the door open for further acquisitions that could speed up Apple's innovation roadmap, especially in AI. At quarter's end, Apple's cash reserves stood at a massive $133 billion, giving it plenty of dry powder for future opportunities. A question that might split the room: is Apple's iPhone future-proof? Interestingly, when asked if new AI hardware from companies like OpenAI might threaten iPhone's dominance, Cook expressed confidence. He expects these innovations to complement, rather than replace, Apple's flagship device. It's difficult to see a world where iPhone is not living in it. What do you think? Are we truly witnessing the dawn of Apple's next growth era, or are we just seeing a temporary surge propped up by loyal fans and clever accounting? Do you believe AI hardware could one day render the iPhone obsolete? Or is Apple's iPhone surge and tariff challenges a look at 2025? Apple has recently experienced a significant boost in its iPhone sales and a resurgence in revenue from China, which is particularly crucial for the company as these sectors had faced challenges over the past year. This unexpected surge in performance has provided reassurance to Wall Street investors, indicating that vital segments of Apple's business are maintaining stability. However, the company is also grappling with the implications of President Donald Trump's impending tariffs, which could result in a hefty $1.1 billion impact this quarter, as noted by CEO Tim Cook during a discussion with analysts. This figure marks an increase from the $800 million in tariff-related costs incurred in the previous quarter. In the quarter ending in June, the iPhone alone generated an impressive $44.5 billion in revenue, surpassing analysts' expectations of $40 billion and significantly outpacing last year's revenue of $39.3 billion for the same timeframe. Overall, Apple's revenue for the quarter reached $94 billion, reflecting a 10% increase compared to the previous year. Notably, iPhone sales in China also showed growth, rising from $14.7 billion in the third quarter of 2024 to $15.3 billion in the most recent quarter, which is a positive sign for a market where Apple had previously struggled. Following this news, Apple's stock saw a modest increase of just over 2% in after-hours trading. In contrast, tech giants like Microsoft and Meta experienced much larger stock surges of nearly 7% and over 9%, respectively, driven by their advancements in artificial intelligence. This stark difference highlights Apple's ongoing struggle to keep up with its competitors, as its stock has declined nearly 15% this year, missing out on the broader market rally that has benefited many other companies. In the past, strong iPhone sales would have been enough to excite investors, but analysts are now pressing Tim Cook for a clearer vision of how artificial intelligence will influence future Apple products and the role of the iPhone in an increasingly AI-driven world. Cook remains confident that the iPhone will continue to play a vital role, even as AI becomes more integrated into daily life. It's hard to envision a future without the iPhone being a part of it, he stated when asked about the potential shift towards voice assistants and away from traditional screens. He emphasized that while Apple is exploring various innovations, devices like the iPhone will likely complement emerging technologies rather than be replaced by them. The iPhone is not just another product for Apple. It is the cornerstone of the company's revenue, making it a focal point for investors. Cook highlighted that the company achieved a record for iPhone sales in the June quarter, with a year-over-year growth of 13%. However, the unpredictable nature of Trump's tariff policies has forced Apple and other technology companies to reconsider their manufacturing and distribution strategies for devices such as smartphones and computers. Investors are also keenly interested in seeing Apple make a more significant impact in the realm of artificial intelligence, especially as competitors like Google, Meta, and Microsoft continue to advance. Earlier this year, Apple shifted a substantial portion of its iPhone production intended for the U.S. market from China to India to mitigate the effects of tariffs. While smartphones were previously exempt from reciprocal tariffs that could have skyrocketed to 145%, Trump has indicated that companies like Apple and Samsung could face a 25% tariff unless they manufacture their devices domestically. A temporary trade agreement between the U.S. and China will maintain tariffs at 30% until August 12. But Trump has also threatened India with tariffs as high as 25% recently. When questioned about how Apple is managing its product assembly in light of the tariff situation, Cook mentioned that there have been no changes since the last quarter, noting that the vast majority of iPhones sold in the U.S. are now sourced from India. He also reiterated Apple's strong presence in the U.S., with approximately 19 billion chips currently produced domestically. Beyond the challenges posed by tariffs, Apple is facing broader issues that could impact its future. The company is often viewed as lagging in the field of artificial intelligence, a technology that many experts believe will significantly influence the economy and transform how people work, communicate, and access information. Apple has postponed a major upgrade to Siri, which was intended to enhance its capabilities to match modern AI systems like OpenAI's ChatGPT and Google's Gemini. Cook assured analysts that progress is being made on the updated Siri, with plans for its release next year. In the meantime, Apple's AI features are scattered across various applications, offering conveniences such as custom emoji creation and text summarization. But these tools do not yet rival the impact of services like ChatGPT. We are also significantly increasing our investments in this area, Cook stated during the analyst call. Apple has always focused on taking the most advanced technologies and making them user-friendly and accessible to everyone. This principle is at the core of our AI strategy with Apple Intelligence. In recent weeks, Apple has faced challenges in retaining key AI talent, with several researchers leaving for Meta as the social media company aggressively expands its AI initiatives. Cook mentioned that Apple is reallocating a significant number of employees to focus on AI development. "We have an exceptional team, and we are channeling all our efforts into this area," he affirmed. Additionally, Apple has been actively acquiring companies within the AI sector, with Cook revealing that the company has purchased 7 firms this year, although not all are directly related to AI. A recent discussion among analysts from Lightshed Partners stirred controversy when they suggested that Apple might benefit from replacing Cook with a CEO who has a stronger focus on product innovation. Ted Mortensen, managing director and technology sector strategist at Baird, expressed concerns, stating, "He's a supply chain guy. They need a tech visionary. I think they're in a lot more trouble than some people realize." What do you think? Is Apple truly at risk of falling behind in the AI race, or do you believe they have a solid strategy in place? Share your thoughts in the comments.